Thank you, Mr. Chairman, and thank you, Mr. Administrator. First of all, let me express support for everything your states are going through in the aftermath of Sandy, and I certainly want to continue to be supportive of all of us addressing that in a full and robust and effective way. So please count me in on all of that, and this hearing is certainly important in that regard. But I also wanted to take the opportunity, since we have the Administrator here, to ask him more broadly about some flood and FEMA issues. And so I'm going to use my time doing that. Mr. Administrator, we've talked before, particularly in the midst of the Biggert Waters debate and fixing that, about the fact that according to a RAND study, which was commissioned by FEMA, this was back in September 2013, only 49% of homeowners required by law to have flood insurance actually bought it. And so that's clearly an issue in terms of making the program solvent. I found that figure amazingly low. I think that's, again, clearly an issue in terms of making the program sustainable. When we talked about it in the past, you pointed basically as the only necessary fix, or the prime fix, something that we did pass into law, which was a major increase in the penalty for that, from a few $100s to $2,000. What's the experience so far in terms of that getting people's attention and dramatically increasing, or not, that 49% figure?
Senator Vitter, I think we're going to have to wait and see. This will be kicking in as we see policies or mortgages or some kind of transaction that would bring about that you have to have it. The issue has been, were people purchasing flood insurance with federally backed mortgages, purchasing that as a requirement? And they either have to buy flood insurance or an equivalent from the private sector. But it was the issue raised was this being enforced from the lender's perspective to ensure that if they were in that special risk area, they were purchasing flood insurance. So as we go through implementing the law and we see those transactions, a lot of this will be done through the mortgage companies that are making these loans, because the penalty is, if they're not doing that, that's where the penalties kick in.
So besides let me ask it a different way. Besides increasing the penalty, are we doing anything differently in terms of tracking and proactive enforcement?
Again, we worked with former Secretary Sean Donovan at HUD to work with a lot of the federal lenders to make sure that this was being communicated, that with a federally backed mortgage, if you're in a special risk area, you're required to have flood insurance equivalent to the National Flood Insurance Program, or a private policy if your state provides that you can get that equivalent as a condition of that mortgage. So a lot of it's been on the education front.
Okay. Well, I mean, in my opinion, that word was out. That's always been a bottom line policy, certainly in a place like Louisiana, everybody knows that, but the figure was still 49%. Let me ask the same question a different way. Is FEMA doing anything to track policyholders versus those required to purchase insurance, to just basically look at the two lists and see the overlap or lack of overlap?
We could look at that, Senator, in a gross, but again, I really would have to ask staff to provide that in writing, because one of the challenges, if you can identify how many homes are in the special risk area, you then have to determine how many of those have federally backed mortgages, and that would trigger the requirement. So we could look at how many are written, how many homes are there, and what that delta is, but it wouldn't tell us what percentage of them have it. You could probably look at the area and make some educated guesses depending upon the age of the homes, but it would be something that would have to go back and actually pull that.
Well, I'm not just talking about numbers. I'm talking about actual lists to compare, to proactively compare, okay, who has the requirement, who has the insurance. And it doesn't sound like anyone's doing that. And if the figure is really as low as 49%, we need to do that. You know, in our previous conversation, you basically say, well, you increase the figure and you also increase the risk. You increase coverage. Well, that's true, but I have to believe that the folks not buying insurance tend to have lower risk. So I have to believe that the program is going to be move far ahead financially the higher you get that participation figure.
Understand, Senator.
Okay. Another issue we talked about previously that startled me is the write your own margin. Last time we talked, I think studies showed the write your own margin was 30% when these folks doing write your own policies assume none of the risk. So basically 30% for doing the paperwork, for facilitating that. Now I know there's work involved, but 30% seems like a huge margin when they assume absolutely none of the risk. Has that changed any, or is there any effort at FEMA to reduce that?
Yes, sir. We're looking at that. That was a flat rate, particularly when you look at policies out of the special risk area. When you're talking about policies that only pull maybe $350, $500, there is a cost of writing that. But as you pointed out, with Biggert Waters and now even with the homeowners affordability, when you start seeing premiums in thousands of dollars, does that flat percentage rate make sense? So we've asked the flood insurance administrator to work with Write Your Owns on what that should look like given the increased rates as rather a flat percentage. Should it be more scaled to the work involved, and what does that cost? You know, obviously these are businesses. We don't want to price businesses out of servicing the policies, but it should not, as you point out, be a reward for writing the more expensive policies beyond which their expenses and reasonable benefit to them would incur.
And roughly, what do you think the timeline will be to come to a conclusion in terms of new policy?
Since we just went from one reauthorization to another substantial rewrite, Senator, I need to get with staff and ask them what that's going to be. We've been focused on implementing the program to stop the increases and to begin the refunds. So this would be additional to ask them to look at and get back to you on that time frame.
If you could get back to me. And if I could just have 30 seconds in closing, Mr. Chairman. Let me make the broader point that I think we really need to look at the cost side, at the administrative cost side of this program. When we talk about flood insurance program being in the red, there is an assumption that we're basically subsidizing a lot of risk. Well, in fact, from 1978 to 2013, we took in a lot more dollars in premiums than we paid out in claims. We took in 13% more dollars in premiums than we paid out in claims. Now, I know there are other costs like mitigation, which is not pure administrative cost, and that reduces risk. But I think a lot of the problem is the administrative and cost side of the program, both in government and in the Write Your Own program. And I think we need to continue to look at that and continue to get the participation rate way up from 49%.
Thank you, Senator. We look forward to working with you.